Hi, folks. So we're going to get started as folks are piling in. For those of you who do not know me, my name is Lisa Kaplowitz. I am a finance professor here at RBS and also the executive director of our Center for Women in Business. This QR code right here is to get on our LinkedIn page for the Center for Women in Business. What we do is through education, opportunity, and thought leadership, we remove barriers, build community, and empower women with confidence and skills. And so with that, I wanted to do a couple quick introductions. And while I'm doing that, I want you to click on this QR code. We're going to do a quick poll as we're going on. You can text, you can do pollev.com, or you can use this QR code right here. And while you're doing that, I want to introduce some of our folks here. The first I have is Katrina Dudley. She is a senior vice president and portfolio manager and investment strategist for Franklin Templeton Investments. She manages the Franklin Mutual Global Discovery and Franklin Mutual European funds and has a passion for advancing women in finance and business, mentoring tons of different folks. She's also a frequent market commentator on Bloomberg and CNBC. She got her MBA from NYU Stern School, a law degree from Commerce, and a commerce degree from Bond University in Australia. She is a CFA and a chartered alternative investment analyst. And I'm excited to say she is going to teach a couple courses in our executive MBA class in the spring. Next, we have with us Ellen Carr. Ellen Carr is also a CFA. She's a high yield portfolio manager at Barksdale Investment Management, which is a majority women-owned boutique investment management firm based in Nashville. Prior to that, she was at Capital Group Companies for a number of years. She is an adjunct finance professor at Columbia Business School and teaches courses on credit markets and cash flow modeling. She is a frequent writer and contributor to the Financial Times and Institutional Investor. She graduated with her MBA from Kellogg and her undergrad from Harvard. And she's part of a whole bunch of other nonprofit organizations as well. These are the authors of this book, Undiversified, The Big Gender Short in Investment Management. And joining us, we have some special guest stars as well. These are four students of mine. And these are four students of mine who started doing an independent study that turned into this incredible collaboration and ended up being a chapter in this book. And so with us now, they're all class of 2020. We have Bernadette Capo, who is a core member for Teach for America, Osaire Gomez, an analyst at Bank of America, and Tylin Johnson, an investment analyst at BlackRock. We also have Emmanuel Marquez, who's an analyst at Goldman Sachs. And so with that, before we get started, I want to see where everybody's head is. Describe in one word investment management. Tricky, demanding, and you can put more than one word, strategic, money, so I want to put it in the poll everywhere. Intricate, stressful, look at this going, stressful, money, demanding, tough, portfolio, risk, very stressful in dealing with money, it seems like, difficult, competitive. Great. It looks like we've got a lot here. Mostly, I'm going to give it one more minute. This is very fun when there's so many people involved. And it's great. We have over 300 people joining us today, so really appreciate that. We'll give it about 10 more seconds. So Katrina and Ellen, it looks like we have a lot of money and a lot of stress going on right now. Okay, I want to move to the next one. I am considering a career in investment management. A for yes, B for no. Wow, we're almost at 50-50. We do have a finance class here. So that could be skewing some of our results. It's going down though, it's going down, it's going down. Oh no! Okay. So it looks like we're at about a 40-60 split. You're not getting graded on this, so if you didn't get the link, it's okay. Okay. And you can also use it up at the top. You can text to RBS CWIB 401. Text to the number 37607. Okay. Great. So about 40% are considering a career in investment management. How many of you understand the specific careers and jobs in investment management? A lot of us want to go into a career that we don't even know about. It's very brave, folks. I applaud you. Okay. So it looks like quite a few of us don't know what these specific jobs are. Now, most importantly, whoops, what just happened? Hold on. How many of you are confident you're going to find a job in investment management? How many of you are confident you're going to find a job in investment management? Okay, so a lot of us are thinking about it for a job. We're not quite sure what that job is, but about 40% of us are pretty confident we're going to do that. Okay, great. That gives us a great baseline. With that, I'm going to stop sharing, and I want to turn it over to our panel now. Katrina, can you just educate us a little bit? Tell us, thank you for being here, first of all. Tell us what is investment management? Tell us, because we obviously don't know, what some of the roles are within the field.
So can you hear me? I just realized my microphone wasn't plugged in, so
yep.
Good. So sorry about the back and forth there. So investment management is about managing your money. I mean, it may be the money that you are putting aside, or your parents are putting aside for a house, or putting aside for their retirement. It could be the money that you or your parents together saved for your college education. So there's a whole lot of money, and that money needs to be allocated somewhere. And what we do in investment management is we pool the savings of all the individual savers, and then we invest that pool of money into equities. On my side, and Ellen on her side pools the same money as well and invests it into fixed income or debt securities. So, if you think about it, we both look at one side of the balance sheet. Ellen looks at investing into the liability side. I'm looking at investing it into the equity side of things. So that's the basis of the industry. Ellen and I are both portfolio managers. So we make the decisions on what securities to purchase for the fund. And both of us are supported by a team of analysts who make the recommendations. I actually wear both hats, so I am a portfolio manager as well as an analyst because I love stock picking. But that's what I get to do all day. Ellen, do you have anything that I forgot about the job?
No, the only thing I want to say is in regards to the word cloud that came up first, I hope by the end of our time together that there will be some more good adjectives applied to investment management, because I saw a lot of words that were stressful and demanding, and Katrina and I are here today to disabuse you of the notion that this is a job that you don't want. So more to come on that.
Which actually is a great segue for my next question. What are some common misconceptions about the industry, right? The two biggest words were money and stressful. Katrina.
Look, I think, number one, I take very seriously the fact that I have retail money. I have people's actual savings. And I will tell you, the one word I have spent my career trying to eliminate from our analyst vocabulary is the word bet, because we are not at a casino betting 50-50 on something. So I want investment recommendations that are coming to me that are researched and well-researched and have that investment thesis. So, that's something that I think is important. Look, I love what I do. I really enjoy it. And I think, yes, it is stressful, but I think most jobs have stress. The stress comes from the fact that you have this responsibility. But the fact is, I know that I can reduce that stress through having great investment recommendations, having a great team supporting me, and allocating that money or investing that money into stocks where we've done more research than everyone else. So yes, there's stress, but I would say it's manageable stress.
No, that's great. Ellen, anything else to add on some of the misconceptions from the industry, some of the stereotypes?
I think one of the stereotypes that we talk about in the book and in public forums like this is that the job is what you see in popular culture. So this could be movies like The Wolf of Wall Street or The Big Short. The Wolf of Wall Street, by the way, wasn't even about investment management. It was about the sell side, which is a different part of finance. By and large, the larger than life characters make really great press and movies, but those are not the people who Katrina and I work with on a day-to-day basis. And one of the things we like to say about our industry is it's not a really horrible culture industry. We like to say that we manage money for the Harvey Weinsteins of the world, but we generally don't work with them. So a lot of the cultural images that you as students might have about the industry before you've worked there are really not true if you go to work for your basic plain vanilla investment management firm.
No, I think that's great. And we talk a lot about diversification as a concept. So we have some finance folks on here, but we have some folks here who are, I think, business forum students. I think they're first year students. They might not know what the term diversification means when it comes to investing, but the same concept applies to our work environment as well. And so I guess, can one of you first talk about just the concept of diversification, and then how would the industry take that, and then how would the industry benefit from diversification and inclusion within the industry itself?
So the state of the industry with respect to diversification is pretty uncomfortable. I say that as somebody who is a diverse person in the industry. Just some headline statistics here. 10% of portfolio managers, so those are the primary people who do investment management. There's a whole team of supporting players that we'll talk about as well, but only 10% of portfolio managers are women. The vast majority of portfolio managers are white. So we're basically talking about results being generated by, mostly white men. What's ironic about that is that, as Lisa mentioned, diversification is finance 101 and investing 101. You would not want a portfolio that was basically 90 Facebook stocks and 10 ExxonMobil stocks. Well, some of you are not going to want ExxonMobil at all, and that's a different
or Facebook, right?
Yes. But you would want a portfolio that maybe had 100 positions so that you didn't have this outsized downside risk for when things went wrong for a particular company. And the irony of our industry is that on the one hand, we preach the benefits of diversification all the time to our clients, and that's what we do in our portfolios. But then when it comes to our own personnel, we're sorely lacking in that respect. One other statistic I want to hit you with, and this is very important to me because I work for a majority women-owned firm, only 1% of total investable assets in the universe, the world, which is about 70 trillion, is managed by firms which are majority either women-owned or ethnic minority-owned. So again, at the portfolio manager level, it's 10%. And then when you look at the actual ownership level, so this is where new businesses are created, it is much, much worse. So we have a long way to go in changing that.
Yeah. And then Katrina, you talk about, especially in the book, about some of the benefits the industry would have for more diversification, including the flywheel and the manifesto, some tools.
Mm-hmm. Yeah, look, so let's just break it down. I mean, we talk about the supply chain in the book, which is the flywheel. So, we're going to talk about some of the work we did, but the basic thing is that, people don't want to be recruited into investment management because particularly women, because they don't see women at the top. And then if we can't recruit them, we can't retain them. If we can't retain them, we can't promote them. And if we can't promote them, there's no female leaders at the top. So that's the flywheel that we talk about in investment management. And that's what the book is designed to kind of, pause or stop and get more women into it. In terms of the benefits of diversity, there's a couple of things. First of all, we talk about at the 30% level. And I think that's really important. It was a surprising thing for both Ellen and I when we did our research, was that initially when you introduce diversity into a homogeneous group, the performance of the group goes down, it declines. So that was so surprising to us. And it's the salient minority effect. And when we get to the salient minority, which is what women are when they're under 30% of the group, you see that performance degradation. And it's the communication cost. The fact that you've got, 5, 10 white men in a room, they kind of know how to talk to each other, and you introduce either female diversity, socioeconomic, even racial diversity, and they're kind of stuck. And so that communication cost is what causes the performance to go down. But once you get over 30%, we get all the great benefits of diversity that we all hear about, greater innovation. And for investment management, we get better investment decisions. And think about it. If you are looking at Procter & Gamble as a stock investment, having the views of people who may use their products and may not use their products, or who come from a different background where they use the products differently, really helps you. And it helps make a better investment decision. And it's not just on consumer stocks. It could be in stocks across, any different industry. So that's what we talk about when we see the benefits of diversity, but we really do believe you have to get over that 30% hurdle. Now, a lot of people have targeted 30% as you've seen the diversity project, let's get to 30 by 30. But the fact is, Ellen's a current marathon runner. I used to be. And, we look at that 30% being like the half marathon mark. It's really an impressive achievement to run a half marathon, but we're in it for that full marathon, and we want to get to parity.
No, I think that's really important. Now, how do we do that? There are different stages of the industry, and we're going to get into the book in a minute, but we just want to lay the foundation so everybody has a baseline understanding of the industry. How do we improve DEI within the industry? So, Ellen, if we start with early stage, undergrad, MBA, and we're going to talk through some of this stuff in a little bit as well, but what are some of the interventions?
Yeah, first I want to say for the record that my marathon time was over 5 hours. So I'm not killing it on the marathon course.
You completed it. That's a huge accomplishment in and of itself.
There's a lot of walking.
I haven't done a marathon.
And also, I want to not steal the thunder of the students or the former students on the call who did such great work for this survey. But just setting the stage, I'm going to go back even further, Lisa, than your original question.
Yeah.
And one of the things that I'm not sure we've mentioned yet, but we need to, is that we're donating all the proceeds of our book to an organization called Rock the Street Wall Street. And what's so great about this organization is that they actually go into high schools and reach girls at a much earlier age than even the undergraduate recruiting pipeline, where most people would start thinking about careers. Now, why is that important? We have studies that show that even in the same family, parents talk to sons and daughters differently about money. So there are a whole bunch of cultural aspects of our discussions about investing in money that might actually dissuade young women from pursuing the career early on. Another thing that Rock the Street Wall Street is so great about doing is addressing this math concept. So we talk in the book a lot about the fact that, yes, you need to be numbers fluent to do investment management, but you do not have to be a quantitative rock star. And I think one of the things that can be off-putting about our industry in general, this kind of goes back to the misperceptions question, is that it's something where you're just sitting there running these incredibly complex linear regressions all the time. That's not the primary math that you use in our job. I mean, it's basically sort of like 6th grade algebra would be the absolute limit of it. Much more of it, unless you work for a quantitative hedge fund like Renaissance, much more of it is going to be the narrative, the analytical skills, really those critical thinking skills that you can get from a liberal arts education. And then once you move into the undergrad part of the pipeline, there are lots of recruiting practices and in the MBA part of the pipeline that actively discourage women from putting their hands up for the job and make them feel underconfident in their ability to get that job. So we saw in the original survey that some people felt like they didn't know what it meant to be in investment management. They didn't feel confident about their ability to find a job there. And that's simply education. And that's something that can be addressed with bringing women and people in general who are in our industry into classrooms and talking to people very early.
Yeah, and I think we're gonna talk about that in a minute with the students as well. I want to jump for a second. in talking about the industry, right? There are a lot of negative connotations that we already talked about, but Ellen and Katrina, what do you like best about your job, and what do you wish would change? Let's do positive first.
Let's do positive. So we interviewed a ton of successful PMs and everyone loved their job. And to also just go back to Ellen's point, no one said they loved it because they were really good at Excel modeling. Okay. So you need to be competent at it, but everyone, as Ellen says, I love the fact that I get to interact with the CEOs of companies and make a difference to what they're doing, be it on the ESG front or be it on capital allocation, business direction, should they keep a division or not? And that's a to and fro conversation, and it's a really important one. But having that seat at the table is a result of the fact that we do a lot of our own research, and we do a lot of very deep research. So we probably know some of the companies that we own better than most other people do, and that gives you that seat at the table and that right to have the opinion. But also, companies are looking for these discussions. The CEO job, I repeatedly hear, is a very lonely job. Most CEOs don't have a lot of real conversations, and these conversations I just think are really important. It's a part of the job I really do like.
Ellen, what do you like?
Well, I thought I get to do the not like part because I'm the bond person. So we always see the glass.
Oh, you guys are the
Katrina likes
negative,
to say
right?
the glass half empty.
Gotcha. Okay, okay.
No, I can't talk about anything I don't like. I love, and this is going to sound a bit odd, I like to tell people that when they approach investing as a career, they need to find their superpower and harness it to make good investment decisions. And with respect to investing, my superpower has been writing. So early in my career as an analyst, I worked for a company where our research notes were shared broadly throughout the firm. And I found that writing did two things for me. One, it helped me clarify what I think. And my idol, Howard Marks, is a big advocate of this. If you don't read Howard Marks's memos, he's the co-founder of Oaktree. You should do that. They're on their website. They're completely free. He writes about the markets in a very accessible way. And yet he has a very deep knowledge of all markets, not just high yield bonds. But with respect to writing, it helps me clarify what I think, to write down what I think about a company, to distill it into a couple of sentences. Whereas, as Katrina said, you're going to know more about the company than most people in the world just because you spent so much time looking at it. But to really have an investment thesis on a company, you need to be able to say that in 2 to 3 sentences. And that discipline is really important to my investment process. The other thing that writing does is that it opens up a broader audience to you. So you can reach a lot more people with writing if you work for a big company than you can by calling people, knocking on doors, doing one-on-one discussions.
And by the way, I want to clarify for everyone in the Gen Z generation, writing is not texting or IMing, right? It's literally a research report, right? And it doesn't have to be totally voluminous.
Actually, it can be, although a lot of what we do, I'm sure Katrina would say the same thing, is IBing. So IBing means instant Bloomberging. So communicating with your peers on Bloomberg. So it can be just so we don't turn all the Gen Zers off and think that they're going to be like churning out these tomes. It can be lots of different media and forms. And I think investment management firms are struggling into the 21st century and embracing these new technologies.
No, I think that's very true. And I want to emphasize again the point about math, because I say it, and Ellen, I don't think we actually said this together. In my classes, I say all the time, you don't need anything more than 6th grade algebra. This is really basic. And I know that because my son's in 8th grade now, and we finished algebra, last year, and pre-algebra before that. So it's really, really true. One thing I want, because I think this is really helpful for college students, again, to understand what kind of skills are needed. What skills are portfolio managers, investment managers, what are you looking for, especially for students right out of college? And we can talk about the technical skills, but you've already touched on that a little bit. I want the interpersonal skills, and I'm not going to call them soft skills because they're actually harder, I think, than the technical skills.
Yeah, that's an interesting one. First of all, you cannot have an attitude. I'm very, very clear. I mean, you are talking to the CEO of a company, and you need to do that respectfully. Okay, and you can disagree respectfully. I'm well known for a spoonful of sugar helps the medicine go down. So I will coat things very nicely and then tell them the bad news and what we don't like. But you need to keep that dialogue going. And I've had plenty of uncomfortable conversations, and I haven't done them with attitude. And I think that that's really important. The second thing, as you talk about math, let's not talk about it in terms of just hard, like programming and math skills. What you need to have is curiosity to understand the math and the answers, because Excel is not going to give you an investment recommendation. It will just help you understand the numbers and the trends, and it will also help you understand what stands out or what's not working. I think, Ellen, I remember we were talking about the Kmart investment case way back in the day, and just doing the numbers, you could suddenly see that they were in a pickle, and obviously that led down the bankruptcy route. But so these are the types of things where I think analyzing and the math makes a lot of sense. Ellen's talked about the writing skills. The final thing is that you as an analyst cannot be successful unless you can communicate your investment ideas. And you need to be able to do them in a way that balances the risk and reward. I do not like investment recommendations that people come in and say, this is a 10 bagger, and they kind of refer to a whole lot of data, like a whole lot of things, like this is a great company, and there's no analysis behind it. And no offense, nothing's really a 10 bagger unless it's a penny stock. We like balanced risk reward. I want to understand the business. I want to know what they do. I want to know what drives the stock. I want to know what drives the business, what drives the numbers, what are the catalysts. So they're the types of things that if you're looking to get into investment management, you don't have to turn up with a pitch about a company having done that, but you want to show that you understand what types of things you should look at when you're analyzing and understanding a company.
And I think that goes well for anything in finance, or even if you're not going into finance, you have to understand the accounting. You all are going to take accounting. And if you can read the numbers, they tell a story. And that's why for my students, 15 to 20% of the exam you just took on Monday wasn't just calculate this in Excel. It was, okay, so what does it mean? And now what recommendation are you going to give? Because that's where you add value. The Excel's the what. I want to know the so what, and now what are we going to do? I think
I have to share you, this is one of the interviewees used to be a professor of finance, and she once actually deducted points off an exam score because the person put an answer down that was just unfeasible. It would never have happened. It was like an interest rate that was just beyond unreasonable.
Right.
And she said, if you just used a little bit of rational thought, you would have realized that answer was wrong. And so she deducted points to teach the person a lesson. So going back, it reminded me of that. And I think that, that's what we're looking for. The person who says, that's unreasonable, and why?
No, that makes a lot of sense. Any other interpersonal skills that you all are seeing from folks, or that you're not seeing from recent grads that you're hiring, that you wish you'd see a little bit more of?
Yeah, I'll just say, so this is something where I think the jury's still out. I think this generation has, and I'm talking about all of you on the call, which, by the way, I'd love to see the poll that says that any of you even know what a Kmart is. I feel like we're dating ourselves quite a bit here. Your generation is doing a great job of putting your stake in the ground and saying, I care about work-life balance, and and I also care about doing something good for the universe. And so I'm not going to go to work with investment management because I think it's an industry that doesn't align with my moral system. So my response to that is, on the one hand, it's great to see people with that moral system coming out of business school programs and college finance programs. The flip side is our industry is changing as well. And so I think that those personality attributes are going to be valuable going forward, because so much of the requests that we get from clients today, and Katrina's done more on this side of things than I have, is about these mandates that are called ESG. So environmental, social governance mandates, which really involve asking companies to do the right thing for the earth, for their customers, for the people who work for them. And so I don't know that that's a personality attribute, Lisa, but I think it is a sort of a bent that is going a value system, thank you, that is going to serve you well in our industry in a way that it wouldn't have even 10 years ago, much less when, dinosaurs like Katrina and me were entering the industry.
Right. And I'm of the same ilk, but I like to think I'm young at heart because, we all still believe those values as well. So with that, I want to turn the spotlight onto our distinguished alumni as well. And let's back up to how this project started, because I think what's really interesting is I think the book in and of itself is interesting and gives us some great interventions and lays out the industry in very plain English for us to start understanding what it is. But there's another layer on top of here with a student experiential project. And so with that, I want to back up for a second, and Ty and Emmanuel, how did this joint research project come together? How did it start?
I can take this one. I think it might have been middle of my junior year at Rutgers. I was kind of coming up through all my finance classes. So I had taken corporate finance, advanced corporate finance, even took derivatives, and kind of got to the point where I was like, okay, like this is all great, but I, kind of want to do something a little bit more, and want to have an experience that I remember and can attribute to my experience at Rutgers and tie it to finance and say, okay, this is something that made an impact, and this is something that added value. And this is something that added value, not just to me, but to the people around me. So I remember sitting down with Professor Kaplowitz, and Ty and I mentioned, we were like, hey, like we would love to do an independent study. Not really sure what, but we kind of have realized that across the industry, even though there are a ton of initiatives to progress both underrepresented minorities, women, it seems as if like as you kind of move up the ladder, less and less underrepresented minorities and less women are represented. So we started thinking, and then I remember Professor Kaplowitz introduced us to Ellen and Katrina, and that's kind of where this all started. Ty, I don't know if you'd add anything to that.
No, I think you kind of hit it on the head. I think the only thing that we realized as we were going through the conversations, as us men kind of do from time to time, is we thought about like, hey, there's no woman as part of this study. And so that's when we kind of reached out to Osiri and Berna, and we definitely wanted to get a woman's perspective on what we were doing. And they were super excited to get in on the research and independent study as well.
Yeah, and I think what's interesting is, and I want to talk to both of you about why you decided to get involved, and even more interesting of how this all came together is I got introduced to Katrina through my husband, who happens to be a sell-side equity research analyst. And Katrina was talking, he's like, oh, I think you should meet my wife. She's doing some stuff with women, and she's a finance professor. And so I crashed this event as the finance professor, where he took a bunch of investors, Katrina included, to DC to meet with the administration to, how is this happening? What's going on? What's the Wall Street perspective? And then what's the government's perspective on what's going on? And that conversation came about because one of his roommates in DC was working for the administration. So this is a clear example of networking, not necessarily going to an event and handing out my business cards, but networking on steroids. Because you never know where you're going to meet people or what is going to come out of this. So I just wanted to mention that as well, because it was very serendipitous that we all came together. And so Berna and Osiri, why did you come on, besides just the fact that Emmanuel and Ty were like, hey, come do this, it seems
fun? So for me specifically, I feel like me and Ty, we've been friends since about freshman year, and we would always naturally have these types of conversations. And then junior year, when he came to me and he was like, hey, listen, he gave me this elevator pitch. He was like, I'm doing this independent study. It's about all of these topics that we always talk about. And I was like, sign me up. This is so cool, like to be on the forefront of something that we've always talked about, that we've always been so passionate about, to make an actual impact. I was all in when he told me about it.
Yeah, similarly to Osari's story, Emmanuel and I interned together and we had a lot of similar conversations. And so when he mentioned the opportunity, I was really excited to dig my teeth into it and learn more.
Which I think is great. And so cool, they came up with this, they wanted to do an independent study. I got connected to Katrina. Let's back up even more a second. So Katrina and Alan, talk about the book project itself, and then I want to go back to the students to talk specifically about their chapter. I can see somebody's hand raised, but I'm pretty good on Zoom. I haven't figured out how to call on people. Okay, so you have to put the question in the chat, but that would be awesome. So Katrina, Alan, talk about the book project itself and what surprised you most.
I'll start and I'll hand it over to Ellen. So the book, talking about, serendipitous meetings, that's actually how the book started in the beginning. Ellen and I had known each other, had actually not even overlapped in LA, but we had talked about the fact that, we had been both mutual runners and were part of a running group. Fast forward 20 years and we reconnected in Central Park. It was just after Ellen had been to a faculty meeting for adjunct faculty at Columbia, and she'd sat next to the editor there, and they had talked about the lack of books written by the adjunct faculty, as well as the lack of books written by women about finance. And Ellen and I at this chance meeting in Central Park were talking about this. And I talked about how I'd done a lot of work and research and looked into that area. And I said, I'd be interested in writing a book, and Ellen was as well. So we went through the book proposal phase, and that's how we got to that sense. So I think, Lisa, the same way I had the chance meeting with you, it was a whole lot of events that just came together at once, but it was a lot of fun. So Ellen, do you want to follow up with your thoughts on the project?
I think my interest in, and Katrina and I had both observed independently before we had this serendipitous connection, that we didn't, it was just odd to us that we didn't encounter more women in our industry, because most of the time, in my experience with friends and, people who I went to business school with, when women decide not to pursue an industry or a career, it is primarily work-life balance driven. And my experience in investment management was that it's actually this sort of hidden secret. I guess it's not a secret anymore because we're talking about it, but it is not very, it does not rank on the top 5 lists of industries that are most work-life balance challenged. So that would be things like, I do high yield, as Lisa said, the corporate law attorneys who work on restructurings for companies that are going through a bankruptcy have 90-hour work weeks. And many of them, I've met many women in my years who do corporate law. I have one of my friends right now is representing the Sacklers in the opioid trial. So she probably has a hard time looking at herself in the mirror. But the point here is that, if you look across lots of different industries, and then you think about the way that our industry works, we don't punch a time clock. So if only the market cared that I put in 40 hours on my horrible thesis for, Chesapeake, which is an energy company that went bankrupt that unfortunately I owned. The market didn't care. I could have put in, 100 hours and still come to the wrong conclusion. And so because of that work-life balance issue, on the one hand, not seeming to be as structurally challenging as it is in other industries. And then on the other hand, the experience I had at Columbia Business School, still have to this day, of finding that only about 10% of the people in my classes are women, despite the fact that the student body is 40% women. That led me to think there's this great opportunity to really educate people about the industry and make sure that it's casting the widest net possible for talent.
I think that's really, really important. Before we talk about what surprised you all, I'd love to turn it back to Osari and Berna. To talk about the research. Let's talk about the project that we all did together. I don't know which one of you wants to start, but talk about the research. What'd you do? What'd you learn?
Yeah, I'll kick it off. So logistically, I think we always talk about the power of our network, and this is a situation or experience that really emphasized that. because at this point we had come back from our junior year internship and we were able to leverage all of those connections we made during the summer and sophomore year internships if we did those as well. And so we reached out literally to everybody and anybody we knew, asked them to then distribute surveys that we compiled or made to their organizations that they were involved in, or sororities, anything like that. And from there, we took the information, we made graphs, pie chart, bar graphs, and visualized it in order to come to our conclusions. I think things that were really interesting, and Berna can talk more about this specifically, is how much education influenced, well, if a woman wanted to pursue a career in investment management, specifically K through 8, K through 12, and also how much of a difference role models make. So if a person saw a woman professor, then they would be more inclined to have a career in investment management. But specifically the K through 12 or K through 8 conclusion, I think Berna should talk about a little bit more because it specifically impacted her career decision.
Yeah, so one of our main findings was, which surprised me most, was how much the K through 12 education impacted one's exposure to finance, their own confidence in what they can achieve, whether it be finance or other male-dominated fields. And something that we uncovered, which was one of our survey questions, was whether or not someone had taken a financial literacy class ever in K through 12 or in undergrad, whether or not they had something other than a savings account if they manage their own money, which Katrina and Ellen talk about in their book as being like an important experience for wanting to become a portfolio manager. And so that kind of led me to realize that I had a personal finance class in high school, but only 21 states in the country require it actually. And just like the impact that your K through 12 education has on your undergrad, which then leads into your own career. And that's kind of what, around the same time of us doing this project, was when a recruiter from Teach for America reached out to me. So if you're not familiar, it's a 2-year program where you teach in a different part of the country. And I'm in my 2nd year right now. I'm teaching 1st graders, but just like that was an opportunity for me to really like put this finding into practice. Like last year, I talked to my students about financial literacy and we watched Shark Tank and talked about investing. And it was so cool to like give them this experience and exposure to something that then maybe if they were in an undergraduate class where they were doubting themselves, they already had that exposure and were like, oh no, like I remember this one time in undergrad or in K through 12 when I watched Shark Tank and I thought that was so cool, like I could do that too, or playing the Sims stock market game that a lot of kids play. But yeah, this study really just like changed my trajectory. I was going to work on Wall Street for 2 years, but now I'm doing Teach for America for now.
Yeah, and then you know what, all 4 of you. So some of the questions that we asked, right, were the same ones that we asked you all at the beginning. Do you think of this as a career? Do you want to have this as a career? Do you understand what this career is? Do you think you can actually land a job in this field? And we found some really interesting conclusions with all of that and influences. I don't know if any of you want to talk about it. You want me to talk about it?
Yeah, I could touch on it a little bit. I think that, and when you kind of mention that, it makes me think of some of the questions. It's almost like, it's not that we were trying to like, you know, draw conclusions, but we definitely, in all of us, I think I could say kind of had some preconceived notions as to what could be a possible influence. And so when I think about some of those questions on the survey, I think about when we asked about if you were in Boy Scouts or Girl Scouts, like if you were an athlete, if you had a parent that was in the industry prior, and so or like a family member that worked in financial services, almost trying to gauge whether, you know, those things had an influence ultimately if women were choosing investment management. And I think that, you know, I think that was when we finally got the survey results and kind of pulled them all together, we found that a lot of those kind of conclusions that we thought would have been able to been drawn from those questions kind of were disproved, and that it really was about that woman role model. I don't know, Lisa, if you want to touch on it a little bit more.
Yeah, so I mean, I think that was what was key. What we found, and I'm just going to use round numbers because it'll be easier for everything. men were almost twice as likely to think of it as a career, understand what the career was, and be confident that they can get a job as women were. However, if a woman knew a high-profile female investment manager, or portfolio manager, or she had friends or family in the industry, to a lesser extent, her female professor, she was up to twice as likely as other women to understand the jobs, think of it as a career, and be confident that she could actually land the job. And so the interesting thing is we surveyed 400 college students, and that was a Herculean effort by Emmanuel and Ty and Asire and Berna to really leverage their network. And we actually had a really diverse sample size. Now, the book is concentrated only on women, and Katrina and Ellen can talk about why that was initially, because while we were able to get a pretty representative sample size at the undergrad level, that gets dramatically reduced, right, as we go into industry, which is a problem, right? Let's go now into, okay, how do we break into the industry, right? So Katrina, Ellen, what roles are there right out of college? How does a student say, okay, maybe this is something I actually think I can do? How do they get there?
So I just want to debunk one small myth about asset management companies, is that the portfolio manager and analyst job, which is what Ellen and I do, is maybe 10% of the workforce. We have another 90% of our Franklin Templeton Resources staff, which handle compliance, handle risk management, handle marketing, distribution. We have compliance, we have traders as well. So the people like myself are not necessarily, or myself and Ellen are not necessarily representative of all the jobs that are available at Franklin Templeton. And that applies also to BlackRock as well. So that's the first thing. The second thing, though, is this idea that, we have different ways to break in. So we have a Futures Associate program, which I think is fabulous because it lets people rotate through those different divisions where they have interest. So, we have some interns that are doing a rotation into our fintech division, someone else starting in marketing and various things. And that gets you exposure to the different careers that are existing just within investment management. So I think that's one of the ways you can get in. I think I also wanted to talk about the fact that we are trying to challenge the investment management industry to eliminate a couple of things in their hiring practice that we don't like. The first of all is you have to do the job often before you get a job in investment management, which I think excludes a lot of people. We make people do a stock pitch before we give them a job as an analyst. And I've never met a doctor who has to do an appendectomy before they're hired as a doctor. Usually they teach you to do that on the job. So we need to do as an industry a better job of doing that. The second thing is we've got to stop lionizing these investment examples. So Ellen and I grew up in real estate families. My dad does not have a stock account, and he's still, he's in his 70s, and he's made his money in real estate. That's what he does. And Ellen, I think, has a similar experience. But we repeatedly heard these stories, such as the kid who would come to the interview and talk about, well, I bought Mattel stock, or I bought Starbucks stock. Maybe we'll make it a little more relevant. When I couldn't, I watched my mom, and she couldn't, get up in the morning and function without her triple grande latte from Starbucks. And that has two elements in terms of what it does to the pool of candidates that we, interview and hire. It has socioeconomic implications because not everyone has access to a brokerage account or the ability to invest when they're that age.
Or buy a Starbucks.
Or buy a Starbucks, exactly. The other element, though, is that we found within the same family, parents talk to their sons and daughters differently about finance. And so that also kind of, that stock example, reinforced those stereotypes. So we're out there on the road trying to change this. And what we want firms, and I think you touched on it, we want them to recruit people based on their curiosity and their willingness to dig in deep and dig into the details. And I think that's what really makes a successful analyst. And then, as I say, we have a whole lot of other professions where, you can be marketing interested, you can be interested in technology, and you can still come and work for a Franklin Templeton, a BlackRock, or a Capital.
No, that makes a lot of sense. What advice would you two have to your younger college self? And then I want to turn it on to our alumni so they can talk a little bit about what they're doing right now and how they transition. But Ellen, Katrina, what would you tell your college self?
Well, my college self majored in literature and spent a lot of time smoking cigarettes and wearing black. So I'd like to tell her it's all going to be okay. But I think, looking back, the good news is you don't have to figure out right away that you want to do investment management. But the bad news is I think that window is compressing more and more in, as the years pass and the secret about the job kind of gets out. So be curious about the career. One of the great comments that we had in the book, and I think this applies at any point in the supply chain, is that women chronically underinvest in networking. Now, networking is a word that strikes fear into the heart of most people, including me. But networking doesn't have to look like an awkward cold call to somebody who, you met in one of Lisa's classes as a guest lecturer. It can also be, something that's more organic. So, we talked about marathon running, right? Again, I'm a terrible marathon runner. But when you're doing something that you enjoy, just make sure that you're talking to people about their jobs. And because you're in New York, chances are you're going to run across a lot of people who are in finance. And people generally love to talk about themselves. You've obviously heard Katrina and me talk about ourselves quite a bit. So just having the opportunity to chat with somebody about what they do, well, they'll probably come alive and talk to you about, their experience in the industry, whether it's investment management directly or some other aspect of finance. And the more you talk to people, the more you're going to be familiar with the types of opportunities that might exist. And more important, the things that you need to position yourself to get those job opportunities. One other plug, and I know we said we weren't going to talk about tactical skills, but the importance of technology and good technology skills is growing exponentially. I see this, I think, even more in fixed income. I do high yield, but on the investment grade side, where so much more of the portfolio management is really positioning yourself with respect to the yield curve and duration. There are some great tools available to help you do that. And you have to be fluent in lots of different types of technology, even some programming. I don't know how to program at all. That's why I do high yield. But I think that having a very robust suite of technological skills is going to serve you well if you decide that you want to pursue a career in this industry.
Yeah, that's great. And Katrina, before we go to you, I just want to tag on to what Ellen said and give you some resources here at Rutgers, especially for the Business Forum students. We have an incredible program here. And Ty and Emmanuel, I want you to talk about it a little bit. And sorry, I think actually all four of you, did all four of you go through Road to Wall Street? No, sorry, I didn't. So Road to Wall Street is a program that we have here. I think you have to apply your freshman year. Do not be scared of the application. I'm just going to tell you that right now. Do not be scared of the application. We are looking to have a more diverse class that comes into this program, but it really is an incredible program. Can one or two or three of you talk about that program a little bit? I know you've all talked about it a lot.
Yeah, happy to. So Road to Wall Street, I think when I did it, I applied my sophomore year, but kind of given how recruiting across the street has kind of gotten pushed up a lot, I think now applications start about your freshman year. I think the first semester is like introduction to like networking 101, how to, like update your resume, career development things, etc. And then the second half is a financial modeling and markets class that I thought was extremely helpful as I went into my internship my sophomore summer and my junior summer. It was extremely differentiating. Like I kind of walked in and felt like I at least understood what was going on. And it was extremely helpful as I kind of moved throughout like my finance classes as well, given I took it before I took Intro to Finance, which was great.
Yeah, kind of going off what Emmanuel said, giving the recruiting process for internships is so early on. The Road to Wall Street class really gives you an early exposure to the stuff you'll need to know to do a stock pitch, for example, for sales and trading. Or when I was going through interviews, it was great having other people in my network in that class going through interviews. Or we would go, like one time I had an interview that I totally botched, and I came in the next day, raised my hand and asked, like, I got this question, what are, like, how do I answer that? And then like that experience we got to share with the whole class, and everyone can learn from it, just not me. Also, they open you up to a huge network of Road to Wall Street alumni, which is super helpful. And it's kind of like a great buzzword if you email someone and say, like, hi, I'm Bernadette, I'm in the Road to Wall Street program. They kind of like, their ears perk up a little. Not that you need to be in it, but I would definitely encourage you to apply. And even if you're not sure you want to do finance, I would encourage you to apply. And
No,
don't just keep doing it.
That's great. And Ty, before you get there, I want to also point out, I botched an interview once too, and it was really embarrassing. And I was in grad school. And Lehman, which I guess it was a good interview to botch. Lehman, my husband ended up working there, so he obviously didn't botch that one. But they asked me what classes I was taking, and I froze. And for my students that know me, like, I don't freeze that often. I don't know what happened. I just had a brain fart. And I couldn't remember what classes I took. And the interviewer is trying to prompt me, did you take finance? Or are you taking, needless to say, I kind of walked out of there in about 2 seconds because I knew it was done. But I still ended up getting a job on Wall Street. So it doesn't mean that your life is over if you don't end up doing well on one interview. And all of us, you know, have those mistakes in our careers. Ty, I know you just put, and Berna, thank you for posting the link. And Ty, you posted a YouTube video, and you talk a lot about Road to Wall Street. Can you talk about what you got out of it, why you joined, and what you usually tell other students when you're doing info sessions with them?
Yeah, definitely happy to talk about it. And the link I put in the chat, I think I put it in because I feel like I will talk better to it because I was prepared for that video and kind of had a crisp, clear-cut answer. But usually, I mean, Road to Wall Street for Road to Wall Street for me, I think it was really important. I mean, for those just background, like I was born and raised in the city of Newark, and had parents that worked retail jobs. I had zero clue what was happening in terms of Wall Street and what careers were available. And so the program really does a good job of going through the front office revenue generating careers, asset management being one of them, and kind of, you know, talk about what is expected. And for those who might be from backgrounds like mine that really don't have that context and that, you know, clarity in terms of what is out there, it's really impactful in that case. And like Berna and others have mentioned, the mentorship is really important piece of the program, I think, and technical skills as well. You actually take a financial modeling class. So Professor Kaplowitz would know that when me and Emmanuel arrived at her class, we were luckily really prepared in terms of being really savvy with Excel and some of the early modeling. And so it really kind of gives you a fast track, accelerated way to do well in interviews and also be successful in kind of approaching a career on Wall Street.
No, that's great. And I think applications are spring semester first year, correct? Yeah.
Exactly. And
Yeah,
I would
that's
also
correct.
add that I still use all those Excel tricks and everything to this day at work. So
Good. So for my students, you know, who I had you do that 14-hour module of that Excel bootcamp, there's a reason for it. So good. And by the way, so I saw some other folks, you know, we have a lot of transfer students here. Yes, that program starts out early. There are also early identification programs that a lot of the financial firms have, focused on underrepresented minorities, people of color, women, et cetera. I know I post them in my class. I think they're on Handshake and some of our other platforms as well. So definitely take part in those because it's a great introduction and education to jobs in the financial services industry. And then finally, join the student clubs. Rutgers Finance Society in Newark, LIBOR in New Brunswick. We just started a club called Smart Women Securities. It's on the New Brunswick campus, but I think it's accepting Newark students as well. I'm the faculty advisor for that. RUWIB, Women in Business, faculty advisor for that as well. Also the other affinity clubs, Alpha, Ascend, really important. That builds your network up. Berna, I know you were going to say something as well.
Yeah, I didn't transfer, but I switched. I originally thought I wanted to be a doctor, and then I switched into the business school. So I actually wasn't even in the Road to Wall Street program initially, and I networked my way into it. Like a spot opened up, and then I ended up like bugging the right people, and someone supported me who was a mentor, was like, you should let this girl in, give her a shot. And so I'm not saying you should try to like weasel your way in, because it might not work. And sorry, Professor Kaplowitz, if a lot of people start coming to you for this, but even if that's not an option, even if people say no, keep trying and like try to get as many resources as that from that program that you can, even if you're not a part of it.
I think that's a great point. Let's talk about, you guys all graduated a year and a half ago, almost 2 years ago at this point. Asari, what are you doing now? And how did your Rutgers experience help you?
Okay, so I'm a corporate banking analyst at Bank of America. I sit in the subsidiaries group, which means we deal with internationally headquartered companies who have subsidiaries here in the US. Previously, about in March, I made the switch. I was an investment banking analyst here at Bank of America for about a year or so. I interned in the same investment banking group as well. I was in real estate and made the switch like halfway into the first year. So I'm a second year analyst now. I would say Rutgers prepared me really well, I would say, mostly because of all of the organizations I was a part of. I was the treasurer of RULib my junior year, and then I was members of Alpha, Luna, which is main campus, and different things like that. And these prepared me because it just really taught me how to talk to people and interact in that way, professionally, friendly wise, and things like that. And which is really important, I would say, because, you know, you sit next to people you've never met, and it's really important to make that connection because you're going to be working with the person next to you for quite some time, depending on how long you're in a role. And so that was literally one of the best things that I learned at school. It was just, you know, going up to a random person and starting a conversation and things like that.
Great. Emmanuel, what are you doing, and how did Rutgers help you in life after college?
Yeah, of course. So currently working at Goldman Sachs in the private bank or private wealth management channel in a capital markets group, specifically focusing on the distribution, sales, and marketing of derivative products, SMAs that are separately managed accounts that utilize derivatives, and structured products across all of our platforms. So essentially,
so hold on one second. So Emmanuel actually uses really hard math, much harder than some of the other stuff that we've talked about. But that's one of the areas where he's actually using a little bit more complex stuff. But you're really smart.
Yeah, I mean, I would say like part of my role, like I still think that like, okay, maybe like 9th grade algebra, but like it's still not crazy math. Like once you get past the first month, like it's pretty straightforward. But yeah, so essentially focusing on distribution of all these products across our private wealth management channel and a few third parties. And yeah, I mean, it's been great. I think one thing that my experience at Rutgers really helped with was just the grit that was instilled in me. Like I kind of look back to my experience at Road to Wall Street, Professor Ken Freeman, awesome professor. You know, I kind of look at my first year and like I remember showing up my first few months and kind of the question that came in my head every day was like, okay, like, do I really belong here? Like I look around and like nobody really kind of came up, you know, same way I did. I also grew up around Newark, New Jersey. Both of my parents, blue collar jobs. And I kind of looked around and I was like, okay, like, I don't really know if this is for me, but I think one, like, you know, not just Goldman, but I think across the street, like our industry really values and appreciates people that come in and like do the hard work and kind of perform extremely highly. So I kind of just, you know, one, I had great mentors, like my manager is phenomenal, and they really made it a point to mentor me and to, you know, help me kind of come up the curve and perform extremely well. So I've, you know, I kind of look back on my experience at Rutgers and specifically Road to Wall Street. And I think that that's really been kind of like the key and like the cornerstone of my first year and a half here at the firm.
That's great. Ty, I'm going to end with you. But Berna, we know what you're doing. But what did Rutgers, how did Rutgers help you in deciding, you know, what this next phase was?
I would say Rutgers, given it's such a big school and you don't really even have like your own advisor, it gave me a lot of important skills to be a self-starter. To if you need something, you get it, you find where to get it, you look it up online, ask people. It gives you a huge network. Just like really taking initiative when you need it. I would recommend making great relationships with your professors, because they know people who they can connect you to, who might be the people that work at the place you're interviewing for. That's really has been so helpful. And just like whenever I'm having like I can't even say it's a midlife crisis, but I would have doubts a lot of the
You're
time.
not old enough.
I'm not old enough for that yet, but I have them a lot. But whenever I'm like, what am I doing? Should I be doing this? What direction should I go to? There's people that can help you, whether it's your professor, career management. There's so many resources. So like, I really encourage you to take advantage of them.
Great, thank you. Ty, and the reason I'm ending with you is because you're actually doing some work in the real world that's somewhat related to our book as well.
Yes, indeed, and I'll touch on that briefly for sure. I am in the multi-asset group at BlackRock, specifically in a group called Manager Research. And what we do in Manager Research essentially is we get to talk to the Katrinas and Ellens of the world, or other portfolio managers across equities, fixed income, and alternatives. And ultimately what we're doing is we're recommending those managers for our clients to invest in, those clients being the endowment. So you could think of like the Rutgers endowment. It could also be family office, which are, high net worth kind of families, and all types of insurance and pension plans as well. Quickly, in terms of how this correlates to the independent study, or one initiative that I was pulled into in the second week on my desk was to help us kind of think of a framework for our diverse manager program, which continues to make progress. But essentially, understanding that diversity and inclusion has become a real focal point in the industry now. BlackRock is starting an initiative to really find more women-owned, Latino, Black, and diverse-owned managers. And so what I've been able to help with is reaching out to the current asset managers on our approved list and Manager Research to get gender and other demographic diversity stats to be able to understand how we stack up on the BlackRock side in terms of having women-owned and diverse-owned managers on our platform, and now kind of thinking of a way of how do we find more managers that are women-owned and Black-owned. And quickly, how Rutgers kind of helped me post-college. I would say I definitely echo Emmanuel's point on the grit, but for me, I think one thing that Rutgers does really well is having professors of practice like Lisa is, and then also professors who have done the research and are more academic focused, which allows us really to get a more academic view of the industry versus someone who was really in the industry and are able to go through case studies or talk about real life examples that they've went through. I think having those experiences really prepared me for joining the workforce full time.
No, I think that's great. And thank you, Katrina, for answering the question real quickly, because we are basically out of time. But before we depart, and I say thank you for everyone, we're going to see what kind of impact we made. Okay. So I want to pull up, let's see if my technology works. Okay. So hold on one second. Don't type anything yet. It's the same code. I am considering a career in investment management. A is yes, B is no. This is what we want to see, folks. Again, a lot of this comes with just being aware of what's out there. And I know one of the hardest things in college is to figure out what you want to do, because you don't know what you want to do because you haven't tried anything yet. This is my third live event today. I had 3 classes. This is my third one. It looks like we're at 70% almost of folks that want to pursue a career or considering a career in investment management. Awesome. Oops, hold on. I understand the specific careers, jobs, and investment management. So Katrina and Alan, when you're on the road, talking about the book, I'm going to give you these stats for you, so you can show the impact as well. but so I was saying, this is my third class today, and every class today, I brought in a panel of experts to talk about different job functions based on how the students answered the survey at the beginning of class of what they think they want to do. 85% understand careers in investment management. That's almost a twofold jump from where we started. And the final question is confidence. I am confident I will find a job in investment management. We're not scared of the math anymore. We have analytical skills. You don't have to be a finance major in order to do it. So really, really sound and important. Am grateful, 76%. I'm going to stop sharing this right now and go back. So thank you. Thank you to everybody. Really appreciate Katrina and Ellen, your time and your partnership in this amazing project and collaboration we were able to do with the students. Ty, Emmanuel, Asare, I think I'm going to see you in a couple weeks at the 2020 graduation. I'm going on stage. I get to be the finance representative. Berna, I hope to see you soon when you decide to come back east. Great to see you all.